Hi guys, welcome back. It's Ian from E2A Educate to Accumulate. So we've got a short in the Canadian dollar against the Japanese yen this morning. We'll review that trade. It's starting to move to the downside. I also want to look at Swiss against yen. Now, as we said this morning, not the sexiest of trades and the setups aren't 100%, but when we look at the long-term chart, they're offering very substantial risk against reward setups, and that's very important when we're looking at these trade setups. So let's get to the charts. Here I've got the CAD yen, so we talked about this formation this morning. This is my short entry level, including spread at 90.95, and we're starting to move lower. So first profit target hopefully is going to be down here, and then potentially a bleed for this formation lower. So that's the CAD against the Japanese yen, but I wanted to look at Swiss against yen. So just to reiterate and just to talk about the yen product or the yen single basket, we've got support down here. So we're pretty close to support. You can see that we have moved away from there, which is probably the single currency that's pushing that CAD yen trade at the moment. But there's still scope for a mild move lower towards this support level, and we've got to keep that in mind. Now, looking at the Swiss franc, and this is why I'm saying it's not a typical setup, because we've got two different formations here. If we go to the hourly chart, this highlights that we could potentially be moving higher in this leg of a Gartley formation, so up in the CD leg, but these are the important levels as far as I'm concerned. So this is a dotted or a dashed black line, and that highlights some resistance in the Swiss franc. So when we look at this time frame, and this is the 4-hour chart, we could already be in this CD leg to the downside to complete this crab formation, sorry, this butterfly formation. So we've got two views here, and that's why I'm saying it's not a natural setup. It does have to offer really decent risk reward to get into this, because there's two possibilities with regards to the Swiss franc. So the yen we're seeing to the upside. There's possibility that the Swiss could continue with the yen. You've got to remember they're both risk products, so they could both continue to the upside. So we're sort of banking on the Swiss franc turning lower and pushing down to these sort of levels. So as I said, not a typical trade setup, as we've got a mixed view on the yen. But let's go to the charts, and because we've got a mixed view on the yen, we've also got a mixed view on this sterling yen setup. So the 4-hour chart, similar to the Swiss chart, highlights that we could move all the way up here, okay, which we obviously don't want to do if we're on a sell trade. So we've got money management here is key. We need to know where our stop loss is going to be and where our potential target is going to be. So if we go to the hourly chart, this is what could be happening. Okay, so we could be rejecting the 88.6% pullback level, which we talk a lot about in the BC legs, and we're actually coming down here to form a bat formation. Now, you might say, is that worth the risk against rewards? So if we just look at a short position here, and remember, we're not quite there in the Swiss franc, and we're not quite there in the yen, so I haven't pulled a trigger here yet, and in fact, a trigger is probably going to be up around this sort of level. So again, is offering, 11, nearly 12 to 1 as far as risk reward is concerned. Why did I say that this could be sexy? Well, as we've already talked about, really need to place your trades in more than one unit so that you can filter out at your first target, but then hopefully get what we call a bleeder to get to the second target. So red hat on, looking for a sell. We're looking for something to bleed here, and that's where you really make your decent returns. So if we go to the weekly chart, what do we have? Well, this is sort of going back to normal analysis. This is what most technical traders will be looking at. It's an ending wedge pattern, so we can put oscillators on here. We'll see divergence. We'll see all sorts of different things that should convince us to sell the Swiss against the yen. What I like is the fact that we've had a retest. So we've got the wedge breakout line here. We've got a retest here. We've got an inside bar as far as this weekly candle is concerned. But the most important thing is the target level. So going back to taking a potential short position with a target level here. Where's our stop? Well, we already mentioned where the stop's going to be. It's going to be above this level here. So say we put the stop in at 125.16 for argument's sake. So 125.16. Going back to this chart, let's place our stop at stop. Profit target stop level 125.16. Watch that drop. So you've suddenly got a very high risk reward trade setup. You've got 25 to 1 in this potential bleed. So say we take it in 2 units. It's the easiest way to calculate. We've got 1 unit that's going to give us 25 to 1 if it's correct. We've got another unit that is going to give us 12 to 1 potentially. So 25 to 1, 12 to 1, that's 37 to 2. If we halve that, it's what is that? Nearly 19, let's call it 18 to 1 risk reward setup on selling sterling Swiss yen at a slightly higher level. And that's what we're looking for. We're looking for high reward trade setups, low risk, medium-term trade setups, basket setups, the whole kit and caboodle. Okay, guys, good luck. Speak to you soon. Many thanks.